What is up, everyone, and welcome back to Explain the Charts. Today, November 9th, 2025, we are doing an in-depth analysis on Litecoin, or LTCUSD, which has been making massive waves in the market recently. We're going to cover the explosive news driving the price, and then dive deep into the charts to see what they're telling us. The headlines are overwhelmingly bullish right now. We're seeing reports from Coinpedia and CoinGabbar about a 15 to 16% price jump, pushing LTC past the psychologically important $102 level. This rally isn't just random market noise. It's being fueled by some serious fundamental developments. Sentiment data shows a 6% increase in whale wallets holding over 100,000 LTC in the last 3 months, indicating significant accumulation by large players. On-chain volume has hit a record-breaking $15.1 billion, showcasing incredible market liquidity and investor interest. A huge catalyst appears to be the growing institutional interest, spearheaded by the launch of the Canary Capital Litecoin Spot ETF in late October. This ETF has seen steady inflows, now totaling over $3.2 million, which signals rising confidence from professional investors. Furthermore, the CFTC's designation of LTC as a commodity and the increasing demand for its MWEB privacy feature are adding to the bullish sentiment. However, it's crucial to maintain a balanced view, as some analysts, like those at CCN, have pointed to long-term structural weakness and potential pullbacks toward the $70 support level. So, with that mix of extreme bullishness and underlying caution in mind, let's jump into the charts to see how this is all playing out. Looking here at the daily chart for LTCUSD, we can see the broader story of the past year and a half. After peaking near $147 in December 2024 and again in February 2025, Litecoin saw a dramatic correction, finding a hard bottom in the low $50s back in August and again with a flash crash in October. Notice this massive red candle on October 10th, where the price plummeted from a high of $135 down to a shocking low of about $55 in a single day, before recovering significantly. That event likely shook out many weak hands, creating a floor for the subsequent recovery. Since that capitulation event, the price has been in a steady uptrend. We established a clear support zone in the $85 to $93 range throughout late October and early November. However, look at this sharp drop on November 3rd, where we wicked down to almost $85 before recovering. That dip was quickly bought up, showing strong demand in that support zone. Then, just 2 days ago on November 7th, we saw this enormous green candle, a more than 17% move in a single day. This move sliced through the $95 to $97 resistance area and decisively broke above the key $100 psychological level. This powerful move directly correlates with the news of historic on-chain volume and ETF inflows we just discussed. Yesterday, on November 8th, we saw continuation, pushing to a high of over $108 before closing around $107.25. This shows some profit-taking at the highs, which is expected, but the bulls have so far maintained control above $100. Now, let's zoom in on that explosive move on the 1-hour chart to see the mechanics of this breakout. We're filtering from November 6th to the current price action. You can see leading up to the pump, Litecoin was consolidating in a tight range between $85 and $89. This coiling price action often precedes a significant expansion in volatility. The initial push began early on November 7th, breaking above $90 with a surge in volume. It then briefly paused, retesting the $93 level before the primary ignition phase. That next leg up was incredibly powerful, blasting through $100 with barely any resistance. The volume during this ascent was consistently high, confirming the strength and validity of the breakout. After peaking above $106, we entered a period of consolidation, forming a bull flag pattern as the price digested the gains. Yesterday, we saw the breakout from that bull flag, leading to our most recent highs around $108. This pattern is classic bullish continuation, suggesting that the market is absorbing selling pressure and preparing for another potential leg up. For the very short-term picture, let's switch to the 15-minute chart for the action over the past day. We can see the price made a high of $108.30 before pulling back. It has since found intraday support around the $101 level, which it tested multiple times. This level is critical for bulls to defend in the immediate short term. The price has been making a series of higher lows since that test and is currently trading around $107.25. This indicates that buyers are stepping in on dips, even small ones. A break above the recent high of $108.30 would signal a continuation of the uptrend. Conversely, a sustained break below the $101 support area could see the price retest the major psychological level of $100. Let's pull back to the daily chart to synthesize everything. So, what is the outlook from here? The bullish case is very strong at the moment. We have a confirmed technical breakout above $100, backed by immense volume and strong fundamental drivers like institutional adoption via ETFs. The on-chain data with whale accumulation suggests this isn't just retail FOMO, big money is getting positioned. If the bulls can maintain momentum and hold the price above the $100 to $102 area, the next major target is the resistance level identified in our news analysis around $109.09. A convincing break above $109 could open the door to the next fib level at $119.21, and eventually a retest of the previous highs in the $130 to $140 zone from late 2024 and early 2025. Now for the bearish case. After a nearly 20% move in just 48 hours, the price is arguably overextended in the short term, and a pullback is healthy and expected. The key is where it finds support. A failure to hold the $100 level would be the first warning sign for bulls. If we lose $100, the next significant support area is around $95 to $97, which was the previous resistance. A break below that would be more concerning and could lead to a retest of the breakout point in the low $90s, specifically around the $92.74 level mentioned in reports. The long-term bearish scenario of a drop to $70 seems unlikely given the current momentum, but it's a possibility if the entire crypto market were to face a major downturn. To recap the key levels to watch, on the downside, our primary support is now $100, followed by $97 and major support at $92.74. On the upside, immediate resistance is at the recent high of $108.30, followed by the major targets of $109.09 and then $119.21. Given the current fundamental and technical strength, I would place a 65% probability that we test the $109 level in the coming days, provided we continue to close daily candles above $102. The likelihood of this scenario increases if we see continued high volume and positive news regarding ETF flows. A 25% chance exists for a pullback to the $95 to $97 support zone to consolidate before the next move up. There's about a 10% chance of a more severe correction below $93 if market-wide sentiment suddenly turns negative. Things to watch for will be daily closing prices relative to the $102 mark and any news on sustained ETF inflows or a sudden drop-off in on-chain volume. That's our analysis for Litecoin today. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts in the comments. And finally, a quick disclaimer. This video is for informational and educational purposes only and is not financial advice. Cryptocurrency markets are highly volatile, so please do your own research and consult with a professional before making any investment decisions. Trade safe, and we'll see you in the next one.